All right. Good morning, good afternoon, good evening, wherever you are listening to me from. I know that many of us, we did follow through with the training I gave to us on Forex trading introduction. Okay. So today we're going to be getting into some advanced aspects. Okay. We're going to be getting into some advanced aspect of Forex. All right. So that's what we're going to be doing today. So I need you to stick around because there are so many things I'm going to be sharing with us today that um, that will be sounding very foreign. And trust me, it's going to be very, 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 very exciting. All right. So I hope you are there. Let me share my screen with us. We're going to get into the trading proper today. Okay. If you have not watched the introduction to Forex trading, go back and watch the video on that, okay? Go back, then watch the video on Forex trading introduction. So what I want to introduce to you today is what we call the trading platform, okay? So what you are actually looking at now on the screen is what we call the Forex trading platform, the popular MT4 platform. This is where we do every single thing. This is an application actually, okay, from a MetaTrader that allows us to trade in the Forex market. And I know some of us, we must have encountered, stuff like this, and you keep wondering, how is it done? So my work today is to teach you how it is done, how you can connect a Forex trading platform, get it downloaded, and open an account, open demo accounts, and then you can start trading. And I'm going to do all this in less than 30 minutes. So I want you to stay tuned. All right. So first and foremost, before you can get into Forex trading, you must understand that you have to work with Forex brokers. You cannot get into the Forex market on your own. You have to get through the Forex market through the Forex brokers. All right. So the Forex broker will love to introduce you to is called the Light Finance. And I will need you to check the description of this video. Okay, under the description section, you're going to see my link to the Light Finance, and then create an account. Actually, it's an affiliate link, meaning when you open an account through that link, yes, and you start trading, I start getting 1 or 2 rebates. I'm going to talk about that maybe later in my videos, how you can be an affiliate marketer with Light Finance. But please take note of this. I'm using Light Finance personally. This is because Light Finance, it's good. Now, there are a lot of brokers out there. Majority, a lot of them are scammers. And even Light Finance I'm using has its own shortcoming. You will never have like 100% perfect broker. Now, I have 1 or 2 reasons why I chose the Light Finance, okay? So I'm going to need you, just check the description section, click on the link there, and open an account with Light Finance. And when you do that, also you can check out the description section there. You're going to see my Telegram channel, Trade with Noni Telegram channel. Join the Telegram channel, okay? And from there, we can be chatting. You can be sending message to the chat room there, and then that's where I give people direct support on their trading journey. So make sure you click there, register with Light Finance, then click on my Telegram channel and join my Telegram channel. So I think let me go to Light Finance and then teach you, show you a few things on opening an account with Light Finance. So this is Light Finance website. All right. Now, when you click on my link in the description box, okay, it's going to take you to Light Finance website. You are just to tap in on the registration and button there, up there, as I'm showing you right away. And then you just fill up your details. Then continue. All right. Now, once you've done that, now you can now go ahead to sign in. All right. So let me just sign in into one of my students' accounts here, since she's live here. All right. So let me just sign in into her account. And then that's what I'm going to use in teaching us. Okay. All right. So you put in your email address and your password, then you can sign in. Now watch, I'm signing in into an account. Now there are two kinds of profile you can have. It's very important to take note of that. So I want to look up here. You are seeing the name. You see the real account as I'm pointing here. Now, if you tap down, you're going to see where they wrote activate demo trading. Now, I'm going to need you to tap in there to click on activate demo trading, because when you're learning, I would love to learn with demo account. Then after some time, I'm going to always encourage that you fund just little, just very little, live funds, maybe like $10, but you activate it, you will fund it on a cent account. So that $10 will be about 1,000 cents. But that will appear on the trading platform as $1,000, but you are the one that knows this 1,000 cents, all right? So, but for now, let's go on with demo. So I believe, check out there again, click on activate rail, you change the profile to rail, but now it's on demo. So what we're about to do right now is to create a demo account. Now, this is your portal. This is your account with the broker. Now, this is where you do all the account opening. Then after that, you will then come over to the trading platform. This is a trading platform where you then log in to trade. Okay, so you don't open an account here in the trading platform. You open the account on the broker's website. Okay, on your profile section from your broker's website. So that's exactly what we are doing right now. I believe this is just like a recap to what we did earlier. All right, so let's get it on. To open an account, you go to MetaTrader. You click on MetaTrader. All right, click on MetaTrader. Okay, you have series of accounts here. Okay, let's just create a new account actually. So you can see where they wrote open an account. All right, now you can actually chat support. If you are not using any of these accounts, you can chat support and they can clear off the account and they can, delete the accounts for you. All right, so let's click on open an account. Now you can see here open demo account because your profile is on demo. All right, so I'm going to need you, or rather advise you, to open an MT4 demo ECN. Okay, you can open MT4 demo ECN, you can open MT4 demo classic. Now there is a difference between ECN account and a classic account. I'm not going to be discussing about that, but if you really want to be serious about Forex trading, from my years of experience, more than 12 years of experience in the Forex market, I'm going to advise you to be using ECN account. Okay, but let's just go with the demo or the MT4 demo classic account. Now, when it comes to leverage, now this is the big one. Okay, now leverage is like a multiplier. Leverage has to do with how much your money can be multiplied that will enable you to take a certain amount or level of transaction in the Forex market. So the lesser the leverage, it means the lesser risk your account can take. Okay, now listen, when you use a lesser leverage, you can see 1:1 here. It means if you have $10 in your account, you can only enter transactions worth volume or lot size of $10. I'm going to talk about volume and lot size when you get into the trading platform. If you choose 1:100, basically what you're saying is this: for every $10 you have, it's like you have the power of, for every $1 you have, that's 1:100, you have the power of 100. So if you have $10, it means you have the power of 1,000. That's 10 times 100. If you have 1:1,000, it means you have the power of $10,000 with your 10 US dollars. Okay, now I'm going to show us practically how this affects us practically in the trading. Don't forget about that. Leverage is a double-edged sword. So I'm going to advise you, don't open an account with big leverage. At least you have something that can control the level of risk you can take in the market. My advice is to stick to either 1:33 or 1:50 as a beginner. Yes, 1:33 or 1:50 as a beginner. So you click on open an account and bingo, our account has been created. Look at the new account here. Take note of the account number. And okay, take note of the account number and always turn it to main. Now click here, because if you don't turn it to main, you can't fund it. This is a demo account, so click on this, turn it to main. Okay, All right. Now we've turned it into main. The next thing we have to do is to fund the demo account. Look at the account you want to fund. Now that's the main. Come over here on trade. You'll tap on there. All right. Okay. You can see down here where they wrote deposit. You click on deposit. Now you choose the amount of money you want to fund your demo account with. So maybe you want to fund our demo account with maybe $200. We'll tap 200 here, and then we click on continue. And $200 you can see here has been added for us for trading. So come over to MetaTrader. Let's do one or two things there before we get into the trading platform. Then you can see you have $200 now in your demo account. Then there's another thing again you need. All right. Come on to settings. Come on to settings. Then you can see where they wrote trader's password. All right. Change that trader's password to something you can remember. Maybe let me just change it to learners at 123 #123. Then first letter capital. Learners #123. Let me make sure that is correct. Learners. I don't think I wrote that correctly. Learners #123. Then make sure that the repeat password is same. Learners #123. All right. So I click on save. Oh, it's like it's not same. Let me check what I wrote here. Oh, this is not correct. Learners #123. Okay, then I click on save. Now my password has been saved. Don't forget the password, learners #123. Now the reason why I'm telling you my trading password is because this is a demo account. The live account, we don't do that. All right. So take note of the account or the account number. This is the account number 100585000025. And then okay, let's check up something again. Go on settings. Take note of the server. Okay, these are the three things you need while logging into the trading platform. You need the account login, that's the server login. You can say the server login. You need the trader's password, and you need the server name. All right, so let's go down to see the trading platform. Please, if you don't have a trading platform installed in your computer, okay, it's very easy to have a trading platform. Go to the broker's website, or from your account here, you can see where they wrote terminal. Okay, you can click here on terminal and then download the trading platform. You can see that. Okay, just follow through the process and then install the trading platform. All right, now this is the trading platform. Okay, now what we want to do right now is to log in into the account that we just created. So how do we log in into the account we just created? It's very simple. Come over to profile. Okay, you come over to profile. Let me be sure that we are still on the page. Okay, this is the trading platform. All right. Okay, yeah, we are there. So you come over to profile. So come over to file. From file, you go over to login to trade account. Then, okay, then you can paste that login or server account login, or you write it here, you type it here. Then when it comes to the password, don't forget the password you chose. Okay, I wrote in there, learners #123. And then if you see where they wrote the server, you can see the server. Don't forget the server is demo. All right, so we select demo here. All right, then what next? Login. Okay, so let's check and let's wait and see what happens next. So how do you know you've been logged in? Just look here where I'm pointing out. You see some numbers. It means that your account, your trading platform is now connected to the trading server. Okay, if you didn't connect, it will tell you no connection, or it will tell you invalid account. So what next you need to check up here? You need to check up here their server login number is correct, and then you can check your balance. We have $200 here. Now you are set to start trading or learning how to trade. So I know many things here look very, very confusing, but let's take it step by step. Okay, this window here is what we call the terminal window. This is where you see any transaction that you execute. For example, I know you don't know what I'm doing right now, but just relax. Let me just place a sell order on Euro USD. On Euro USD. Let me just place a sell order. I'm going to talk about the order later. I just want to show you how the terminal is. You can see under the terminal, I just place a transaction now. And once you can look at the time I entered the transaction. You can look at the type of transaction I entered. It's a sell transaction. This lot size 0.01, which I'm going to talk about later. Now, the currency pair on which I place the transaction is Euro USD. You can see the price at which I place the transaction. The SL means stop loss. Okay, what extent should market go against me before it closes automatically? That's what the stop loss. Now, don't worry, all these things going to learn them in detail. Okay, what is take profit? Take profit is okay. Market starts moving in your favor. Now I'm selling. I'm expecting market to go down. That's why I'm selling. So as market starts going down, it gets to a certain point where it's giving me money. I don't want it to continue. I want to close my profits and take it. That is take profit. But what if market starts appreciating or starts going up? Now I'm selling. Obviously, you know, I will be on a loss. So what extent of loss am I to take? That's what stop loss, the SL, will determine. You can see I didn't put anything there on SL and TP. All right. Then you can see the price, the current market price. You can see this particular one is changing. You can see that 7871. Just wait and see. It will keep changing. 7271 again. You see it's changing and it's changing. Watch this. You will notice that your profits will be changing too. So I'm on minus 0.12 now. All right. Minus 0.13. That's how it will keep going either up or down. All right, now I didn't talk about the commission. Now the commission is this: if you are trading, if the account you open is a MT4 classic account, now you don't pay the broker's commission. But if you open an ECN account, for every single transaction you enter, you pay a broker commission. But that commission you are paying the broker, trust me, my brother, in the long run, it is far better. Why? Because you have better market conditions. Okay. In fact, in a classic account, the broker has the right to close your transaction sometimes. I don't want to get in there. There are some of the there's a training I'm going to do purely on the different kinds of accounts. So maybe watch out for it. Okay, so now we've seen clearly what the terminal is. Now let's go to what we call the market watch. Now, what's the market watch? The market watch is where you see the currency pairs you are to trade. This is where you see the currency pair. So you can see this is Euro USD. If you follow through with our foundation or the introduction to Forex trading, you remember we talked about the bid and the ask. And we said the difference between the bid and the ask is called the spread. Now that is where the broker makes money. Now, but if you open an ECN account, the broker doesn't make money through spread. They make money through commission. So watch this. Okay, let's look at Euro USD. Okay, I always tell you to look at the last four, the last 3 digits. This 875, this 885. Okay, you can see this is just about 1 point away. So the broker, immediately you enter a transaction, you are 1 pip minus by default. Let's check up another one. Ones that are larger. Okay, you can see you under Australian dollar, Canadian dollar, you can see 9045, 9047. Okay, now 47 minus 45 will give you what? 2, right? It's not what it is. Then that means that once you enter a transaction, you are minus 2 points. Now, if you listen to me, I'm saying minus 2 points or minus 2 pips, not dollars. Why? The amount or the equivalent of 1 point in dollars is dependent on the lot size or volume that you use. So that will be where I'm going to be ending my training today. So we're going to see how to do that. All right. So just stick through. Just remember that the bid and the ask is what gives you the spread. But if you're using an ECN account, it doesn't matter the bid and the ask. It's always 0 for you because you are paying a broker a commission for that. Okay. So let's get into now the trading view. Okay. Okay, let's look at other things. All right. Okay, let's just stick to here. The trading view. This is the trading view. All right. This is the trading view. All right. So I know many of you will be wondering what's going on here. I can see some things moving up and down here. Now, there are different kinds of chart patterns. Okay, when analyzing the Forex market technically. Please, I hope you remembered. If you haven't watched our foundation to introduction to Forex, go there and watch it. Okay. Because you're going to learn at least the basics of analyzing the Forex market. We'll talk about the fundamental analysis and the technical analysis. So analyzing the Forex market using graphs and charts is technical analysis. And please take note that whatever you are seeing here in this graph is a representation of what has already happened before. Okay, it's always showing you what has already happened. So technical analysis has to do with using previous price movements or actions to analyze and speculate what will happen next. Now, there are different kinds of graph you will see. This is the most popular. It's called the candlesticks chart pattern. So you notice most of the things you are seeing here, the objects here, they look like candles. Okay, there are different types. Let me go over here. You're going to see the line chart. You can see the chart has changed to lines. Okay, the chart has changed to lines. All right, so you can see this one is bar chart. It has changed to a bar chart. So, but you can select the candlesticks. Now that's the candlestick. Now you can make it bigger by using the zoom in and zoom out. All right, whichever view that you want. All right, now please, I want us to pay very close attention to what I want to show us right now. Now, I know many of you want me to jump into teaching you how to read the candlesticks, but my work for now is to teach you some of the things that that we need to learn before we get into analyzing the candlesticks. So let's get back and learn about leverage, the effects of leverage. I want you to watch what I'm going to do right now. When you want to enter a transaction, now I'm on Euro USD. You go to new order to place a transaction. New order. Now you can see volume. The volume has to do with how much you gain or lose for every single point market goes. Now, how do you do the calculation? Whatever volume you use, multiply it by 10. That is the increment factor for every point market goes. So if I choose here 1.00 and I place a transaction, what I'm saying is that for every single point market goes, standard point or standard pip market goes, I should make $10 or lose $10. So my money practically moves in tens. 10, 20, plus 10, plus 20, plus 30, plus 40, plus 50, plus 60, plus 70, plus 80, plus 100, plus 1,000, like that. Or it can be going minus 10, minus 20, minus that. So can you imagine, for example, if you have $100 account and you are using, okay, we have $200 account and you are using one lot size. What does that mean? That one lot size means that if you enter, for example, as you can see, if I should enter maybe a buy order now, watch, market, I'm being told I don't have enough money. Why is it so? I'm having $200 and I enter volume one lot size and I'm told I don't have money. Now, it's because of the leverage I used. I want to teach you something very, very dangerous and very powerful. Watch. Remember the same account. I was not allowed to use one lot size. Let me go back to my account settings with my broker. Let's go to my account settings with my broker. Okay. Go to that account. I want to edit the leverage. Watch this. Don't forget, 1:50 is what I suggested, but let me go and use 1:500 because I want to teach you, or 1:1000 because I want to teach you the effect of leverage. Let me save. Okay. Let me refresh. Even the trading platform, I will have to close it and open it up again. All right. Now watch this. Please remember this and remember it very well. Leverage is a double-edged sword. Leverage will kill you in Forex trading if you don't take care of it very well. Okay? Please take note of that. I wouldn't want any of you to fall victim of this. Okay? Watch this. I want you to see the effect practically. Watch this. I come over to my account. The same account, one lot side. Don't forget I entered buy order before and I was told not enough money. Now I click on buy. Watch. The transaction gets executed. Now watch. How do I know the transaction has been executed? How would you know? Come down to your trading platform, trading terminal. Can you see here? Can you see -10, -11? Now watch. What happened previously? It was because my leverage was small. Now, can you imagine having one lot size on a $200 account? If market goes 20 points against you, you have lost your $200. Everything will go. Completely, your money will be wiped out. You can see, this, what you are seeing here is -15. Very real. This can be your real money going. Yes, your real money can be going here. But do you notice when we were using, when our account was on 1:50 or maybe 1:33, your account didn't allow you to enter the trade with a high volume, meaning that low leverage enables you to manage your risk effectively. Listen carefully. When it comes to Forex trading, if it's not about taking big risk. Yes, it's not about taking big risk. It's about making the right decision most of the time, making more profits than you are losing. Because whether you like it or not, when it comes to Forex trading, you must lose. Now, losers in Forex are those that lose and lose their money completely. But gainers in Forex and winners in Forex are those that make more profits than they lose. So when you are trading, you must have in mind the amount of money you are ready to risk for every transaction. Don't forget, we're just entering transactions randomly. I've not gone into teaching you the psychology of trading, the entering transaction, because when you want to enter a transaction, you have to look at your profit to loss ratio. Yes. How much am I to make in this market? And what if I'm to lose? How much am I to lose? So let's go back again to our broker and then change our leverage back to 1:50. Or maybe later we can do that. Let me just go back to the trading platform and continue. But now you understand clearly the main difference between using low leverage and high leverage. So you can see how your money is going. -10. This is too risky. This is too risky. I know some of you will be like, sir, what if it works in your favor? Yes, what if it works in your favor? It can work in your favor and you make money. But the point is this, what if it goes against you? Yes, what if it goes against you? All right, so let's just stick to that information for now. So I've shown you clearly the impact of leverage. I've shown you that clearly. All right, so you can see your terminal here. So I know some of you will be like asking me questions like, sir, what do I need to do? As it's going up and down, can I close these trades manually? Yes, you can close them manually. Now, don't forget, we are not yet on how to buy and how to sell. All right, so let's get in now to some things here that are very, very, very important for us. Okay, now looking at the chart, there are two kinds of candle you are seeing here. You are seeing a white candle. We call it the hollow candle, and then whole candles. Okay, whichever one you want to see it. For me, I call it the white and the black. Yeah, I call it the white and the black. That's what I call it. Okay, for me, the inside of this one is white. This one is black. All right, so now you can see these small vertical lines that are here. In fact, by default, look at how this, when you open your own graph, your own chart, this is how it's going to look like. Actually, I was the one that edited all those. I don't like the grids. I don't like trading with the grids. Okay, all right, so you can right click on the chart and remove the grids. Now you can see these vertical lines here. You may not see it. They are called period separators. You can right click on properties. You can see period under common. If you remove period separators, you won't see the lines again. But why do I like period? Why do I like using period separators? Okay, it helps me to know or separate each day from each other. So as you can see here, this is from 13th of May, which is today. Okay, you can see 10th of May, which is Friday. Of course, you know the Forex market closed on Friday and we open again on Monday morning. All right, so from here, you can see the charts of what has happened today. All right, good. So let's get into reading the candlesticks basically. Now, what is this black candle and what are the white candles? Now, the black candles is a representation of what happened when market was going down. It means market was, the black means market was going up. Then the white candle is a candle that forms when market is going down, or when price, please, when I say market, I mean price. Okay, when I say market, I mean price. All right, so let's take a look at what's going on now. Now, each of these candles is a representation of what happened within a time frame. Okay, now watch this. How many candles are we seeing here? There are many from on this 13th of May. Now, there is something we call a time frame when it comes to trading. Time frame is very, very powerful. You must learn to master your time frame. So you can come up here, you can see here 1 minute, 5 minutes, 15 minutes, 30 minutes, 1 hour. Now let me click on 1 hour. You will see that we have lesser candle now within 13th of May. Can you see that? Meaning every candle here is a representation of what happened within 1 hour. Now the last candle is always the candle that is moving within that time frame. So if you look at the time, this is 12:55, meaning this is the 12 noon candle, meaning by 1 p.m. on the dot, this candle will stop moving and a new candle starts because we are on 1 hour time frame. Let me go to 15 minutes time frame. Now, the 15-minute time frame shows you clearly every candle here is a representation of what happened in 15 minutes. Are you getting me? All right. Now, the last candle here will stop forming. Immediately is 1 p.m. and a new candle starts. You can take it to 5 minutes candle. Okay. Now, I want to notice something. Do you see clearly that in 5 minutes chart, the last candle forming is a white candle? Do you notice that? A white candle meaning market is going down, price going down. But if you take the same chart to 15 minutes, which candle are you seeing here? The black candle. This is the buying candle. Take it to 1 hour. Which candle are you seeing? Still the buying candle. So the lower time frame shows you on a closer range what market is doing. That's what it's doing. All right. So take a look at this. What about 1 minute? It changes very fast. Okay. This is now watch. I want you to watch. Let's keep watching. This is 12:56. Immediately it's 12:57. You see a new candle will start forming and then this one will stop. You see, it has happened already. Do you notice it? Okay. Now we are now on 1 minute, meaning the candle will be forming every 1 minute. So this is what is happening now in 12:57. So we keep watching. Can you see it's going down? It's good. And you 1 minute candle flips up so easily. All right, it's going down, but in a split of milliseconds, it can jump up. All of a sudden, you see that? You see that? So you can't really make a long-term decision using a short minute, a short time frame, like 1 minute. All right, so just keep watching. Once 60 seconds expires now or elapses now, a new time frame, a new candle starts forming. All right, so just keep watching. Just keep watching. Keep watching. You must learn to be patient when you are learning to trade. You must learn to be. I spend hours every single day for the past 12 years watching and learning how to read the charts. This is just the beginning. See what's going on. Now, for some of us now, you say, oh, wow, market is depreciating. It's supposed to be said. Can you see? We are now on 12:58. A new candle is forming now. You see that? All right. It's going up. It's coming down. It's going up. It's coming. Now, we are still, the same one candle is still forming on the 5 minutes. One candle, 15 minutes. You see? 15 minutes, the same candle. All right. You see that? 1 hour, the same candle. Now, you can even go to daily chart. Now, if you go to daily, it means it's just one candle that is representing what has happened that day. So do you know when this daily chart candle will stop? This particular candle, don't forget the last candle is one that is moving. All right. Let me zoom it up. Now, by 12 midnight today, this candle will stop forming. A new candle starts. That's on a daily time frame. Now, if you go to 4 hours time frame, it means every 4 hours a new candle forms. So I can see on daily time frame, a buying candle is forming. It means market is appreciating. It means market has been appreciating throughout today. Now, on 4 hours, it means actually market is appreciating. On 1 hour, yes, right now, okay, is appreciating. On 30 minutes, oh, really, is appreciating. On 15 minutes, oh, really? Market reached here, but now it's dropping down. On 5 minutes, we can see clearly it's coming down. You see what's going on now? All right. On 1 minute, you see. Now, what this time frame shows you is this. The lesser time frame shows you on a closer range what market is doing now. It shows you clearer. All right. Now, someone that is inexperienced, immediately he sees, oh, on the 1 hour time frame, market is, you look at it, you have a buy candle, and jump in to place a buy order. Come on, you're going to lose. All right. There's every tendency you might lose. That's if you are trading within a shorter time frame. Now, looking at the 5 minutes time frame, guess what happens? Now, I want us to watch what's going on now. This is 1 p.m. Now, if you go to 1 hour, you know a new candle is about to start forming. You see that? On a 1 hour. Now, everything happening here has stopped. We are now on a new time frame. You can see this, okay? Someone will look at, oh, wow, a sell candle is about to form. Now, let me take my loss. Watch. How much loss are you taking? 60 US dollars. Okay? That's the loss you are about to take right now. That is huge. Huge. You can see that. Huge. Okay? Now, this is the danger of what? Using a very big lot size. You will never allow your market to develop. There's something we call market development. You must be learned to be patient with your trade. All right. So let me just close the transaction so we can get into learning how to trade properly. Now, I want to grab your pens and grab your paper right now. Okay. We're going to get into some notes. There are a few things you must have to take note of. All right. Okay. Let me get into Microsoft Word. There are a few things you must take note of before you enter a transaction. All right. Before you enter a transaction, number one is what? Look at the current price. These are the figures, okay? Number two, you have to look at what? Your stop loss. Number three, you have to look at your take profits. Number four, there's something I call profit to loss ratio, okay? I call it profit to loss ratio, all right? Before you enter a transaction. All right, good. So let's go back to our trading platform. All right, go back to our trading platform. Don't forget what I'm teaching right now is the basis of trading. That's the basis of trading. All right, okay. Don't forget, I'm not teaching you how to analyze right now. I'm not teaching, whatever we are doing right now, I'm not saying whatever transaction you see me enter or execute right now, either buy or sell. Now, we are not analyzing now to know whether we should truly buy or we should truly sell. No. All right. Now, whatever we are doing right now is what we should do or calculate after we analyze the market and know, okay, this is where to buy, this is where to sell. In fact, on a broader scale, they should be a part of our analysis. Where should be your stop loss? Where should be your take profits? All right, this should be in the broader space. All right, okay, so let's get into those things. What is the current price? Take note of that. The last candle shows you 1.07937. That is the current price. That's been noted. Now, looking at this market, if I should place a buy order, now this is the basis of buying and selling. If I should place a buy order, it means that I believe that this market will appreciate and go up more. That's what I believe, right? Okay, but what if it starts going down? What extent should it go? So let me just take something quick. Let me just do something very quick, okay? Let me close the transaction, do something very quick. If I should place this buy order, let me just place a buy order here. 0.02. I place buy. Watch. What is the market? What is the level now? Which price did I enter this market? This dotted green line shows you where I entered the market. 1.07949. You can see how much I'm making here. Minus 0.22. Okay. If the price starts dropping, it means I'm going to keep losing more and more and more money. Now, to what extent should I lose? That's your stop loss. If this market starts to appreciate, so let me use some lines. That's where lines comes in. You can draw some horizontal lines. I can put up this line now and say, okay, if market starts appreciating and gets to this point, it should pick my take profit. So let me say, okay, I enter the market at 1.07994, okay? And I think 104 is going to give us 10 pips. 10. Okay. All right. So from here to here, you can use this cross chair to know. Click here and then drag it up here. Okay. 100 will give us 10. Okay. All right. Always read the middle figure. It's reading 102. All right. Let me just take it. Okay. Close there. I think the closest one is now 99. Is 99. Okay. I have 803. Okay. 804 is the 10 pips. Now means market gets here, I'm drawing a line. I've not executed it yet. Let me drop another line again. Maybe if you believe maybe it's too far, you can bring it down here and say, okay, if market reach here in my favor, it should close. That's your choice. But at the same time, also, you can come over here and drop another line. So, okay, what if this market drops down to this level, 1.07906? Okay, now it means I want to lose only 3 points. This is 793. This is 790. So 793 to 7921, 791 to 790, 3 points, right? It means we are losing 3 points. Now, but what if market starts going up and reaches 799? It means I'm going to be making 6 points. Remember, I'm saying 6 points or 6 pips. What determines how much you make for each point is called what? Volume or the lot size. Okay. So let's fire up with it. Okay. So now I've known these levels, meaning I've been able to determine my take profit and my stop loss. Now I can come over to the trade I just entered now, tap on either take profit or stop loss, okay, to modify my order. So you can actually modify your order. So what is my stop loss? My stop loss is 1.07906. Then what's my take profit? My take profit, I want to be 1.07992. I click on modify. Immediately. Let me delete this line so you can see the lines appear. So you can see the lines now. Oh, wow. As you can see now, we placed a buy order, really, and the market has crossed the line, meaning it's moving in our direction. That's why we are seeing positive here. Okay? Don't forget what's controlling how much this profit is per point is what? The lot size or the volume. So, but look at the market. The current market price was 1.07962 or 63. Where did we enter the market? 1.07994. You see that? So actually, the market is above where we entered it. This green line shows you where you entered the market. All right. So we are buying and is above the line. That's why we're making profit. But if you are buying and your current price is below your entry price, you'll be losing. It means your profit will be in negative. All right. Okay. You can see it's going down. As it's going down, you can see everything dropping down. All right. So now I've taught you how to place your take profit and your stop loss. Now let me give you the introduction to chart analysis. Now this is where I'm going to be stopping for this lecture. Okay. I'm going to be stopping here for this lecture. The introduction to analyzing the charts. Very important. Now, I want you to watch. Let me minimize. Let me use my let me use the zoom in and zoom out to reduce this. Let me go on a higher time frame. Okay. Okay. Let's see. Let's analyze what has happened. I'm on 1 hour time frame. Let's analyze what has happened today, being 13th of May. Because don't forget, technical analysis is about analyzing what has happened, using what has happened previously to predict into the future. Let's basically look at what has happened today. Now, watch. Where did the market start today? Let me use horizontal line. Look at the first, now you have to look at the first candle of the day. This dotted line here shows us the first candle of the day, right? Okay, now look at it here. This basic line here, 1.0770. Now look at where the market is. So has the market gone up or come down? It has gone up. Now, looking at the graph, the first concept that I want to teach you when it comes to chart analysis is called the trend. The trend. Okay? I want you to write it down somewhere. The trend. Now, there is a popular cliche that says, never trade against the trend. The trend. Now, what is a trend? The trend has to do with the what? The major market direction. The major direction of the market within a time frame. So if we are looking at, let's go back now. If we are looking at today, okay? If we are looking at today, today is the time frame, you know, from 12 midnight till now, 1 p.m. All right, that's the time frame. What is the direction of the market? Has the market gone up or has it come down? It has gone up. We all can see that. Let me go on 15 minutes. Look at where the market started. Look at the lowest of the day here. Market has gone up. Now, if I should go on 4 hours time frame, okay, if you're asked what is the trend, overall trend on a 4 hours time frame, then what is the lowest low you are seeing here? This is it. This is the lowest low. What is the trend of the market on a 4 hours time frame? Is what? Upwards. Now, what you have to understand this in a time frame or within a trend, that doesn't mean market cannot come down or go up. If market is an upward trend, market will always come down. But the overall direction of that market will be upwards. That's what we call an upward trend. So there are two kinds, or rather for me, that I call, some persons believe there are about two kinds of trend, but I believe there are 3 kinds of trend. So I believe we have what we call the upward trend. Then I believe we have what we call the downward trend. And then we now have what I call the channel trend or sideways. All right, let me show you typical of all of them, of the trends, okay? Let me show you the typical of the trends. Very, very important. I'm running up here, okay? Of course, you know my technique of trading, of teaching. I don't like staying for long. All right, so let's take a look at this. Let me go on a 1 hour time frame. Let me go on USDJPY. Yeah, USDJPY. Okay, so look at today's market on USDJPY. Let's just look at today's market. This is 13th of May. If you look at today's market, it's as if nothing has really happened. It means market is what? Sideways. This is what I call a sideways trend. And if you want to confirm a sideways trend, you can backdate it to about 2 or 3 more days behind. So look at, this is what happened on the 10th of May. That was last Friday. Practically, it's as if market didn't move much. Let's take a look at it. Just within up and down here. You see that? Just take a look at this. It's as if market has moving on a straight line. On this straight line, it will just come touch. You see? This is what I call a sideways trend. Okay, now in technical analysis, we always teach and say, anytime you have a sideways trend, always expect a breakout, either up or down. Okay? Now, in fact, the longer the sideways trend, the stronger the breakout will be. I'll say that again. The longer the sideways trend, the stronger the breakout will be. Meaning, if market breaks out up, it will move so fast. If it breaks out down, it will move so fast. All right. So that's what I call a sideways trend. Now, what you can see clearly here, an upward trend. What is the last major trend in this USDJPY? Looking at this, okay? You can notice that, look at what is the lowest low on this chart you are seeing. This is the lowest low here. Now, where is the market now? Here. From this point, 3rd of May to 10th of May, would you say market has gone up or gone down? Market has gone up, clearly. So this is an upward trend. So since the 3rd of May, for the past 13 days, market has been in an upward trend. Even though for the past 3 days, it has maintained what? A sideways. So we're expecting a breakout either to continue moving upward or downward. All right? So that is what we call an upward trend and a down. So let me give you an example of a downward trend. All right? An example of a downward trend. Let me go to pounds against dollars. If you want to see any time frame, just click on that time frame and then drag it. Drag it to the chart, it will change. Okay? I want to see a typical downward trend. I only want to see a typical downward trend so that I can use it to teach us. Okay? Okay, you can see here. Oh, no, this is not typical. This is not typical. Okay, let me use this as a case study. Okay, from here, I know you can see where I'm pointing at. Let me reduce this, the time frame. Okay, we are still seeing an upward trend. From 19th of April, market has been going up. Okay, let me see if I can see another. Okay, I think this is a downward trend. Beautiful. All right, I'm on it now. Okay, now from 1st of May on Euro New Zealand dollars. This is Euro versus New Zealand dollars. Okay, you can see Euro versus New Zealand dollar. All right, from the 30th of April to 13th of May. Has market gone up or gone down? Market has gone down. Now, let me give you the general rule when it comes to trend. Do not trade against the trend. If you are to trade against the trend, that means you are trading a breakout against the trend, which has a particular way of analyzing or analysis. There is a way to trade a breakout. It's always much more favorable. Yes, the ratio of the profits you are to make or to lose is much more on the positive side when you trade along the trend. What does it mean to trade along the trend? Watch. If the trend is down, sell should come to your mind first. If the trend is up, buy should come to your mind first. This is where this is the first rule when it comes to my trading style, okay, that I'm giving you. Now, we're still going to get into the nitty-gritty when it comes to analyzing the candles, the different shapes of the candles, because they all mean different things. There are a lot of things I'm going to teach you: how to draw trend lines, symmetrical triangles, pivot points. All those things are the complex analysis of of charts. But for now, when you look at a chart, you should be able to know basically what is the market doing. So what is the chart direction from here to here? Market has gone up. Now, you can have a major trend being an upward trend and a minor trend being a downward trend. Okay, we're going to see different applications of that in the course of our trading. All right, so let's just maybe go around again on just as a summary on the volume, which is your lot size, and then entering a transaction and closing the transaction, because I want us to really get basically how to buy and how to sell. All right, so and how to close our order. So right now, don't forget we are on Euro USD, and then on that Euro USD we placed a buy order and we're on 0.46. Now someone will say, sir, what if you have entered it, use a very big lot size? You would have made big money. Yes, of course, and you would have lost big money too if it's against you. Let's do a simple mathematics. But before we do that, okay, let me just leave the chat on. Let's do a simple mathematics, because in my spirit, I just feel like some of you really need to get this stop loss thing and this loss thing. Assuming you use your capital is your balance, that's your account balance, is 200 USD, and you are using a volume. Volume is the same as lot size, okay, of 0.1. Now, this is how to do the mathematics. 0.1 multiplied by 10 equals 1. So it means your money moves 1 point or 1 pip equals $1. Now, what does that mean? If you enter a transaction that has stop loss of 20 points and you're using 0.1, okay, so let's do simple mathematics. 1 times 20 will give you how much? 20. That means you are risking 10% of your capital in that trade. That's what it means. So let me show you again. What if our lot size is, you are using 0.5 to enter the trade? 0.5 times 10 will give you what? 5. It means 1 pip equals $5. 1 pip equals $5. So if you are risking 20 points or 20 pips stop loss, that will be $5 times 20. That will give you what? $100. How much are you risking on your capital? 50%. So how can you be a successful trader when you are risking 50%, half of your capital, in one trade? Every successful trader I've seen, most successful trader I've seen, I've always seen their balance. Most times they lose more than they gain, but they lose less when they lose and they gain more when they gain. I will say what I want to say again, but I'll put it this way. It's not about losing in a trade. is about how much you lost in a trade. You have to view trading as decision making. You must view trading as decision making. Right now, I made a decision on this market. I can either be right or wrong. But my being wrong in my decision shouldn't wipe out all my capital. You can decide how much you can lose when you are wrong. When you view trading as decision making, you will find out you become a better trader. I've seen good traders, they lose less, they make more. Yes, I've seen it. It always happens. Because that's what trading is all about. So I want you to learn this today. It's not about being wrong in your decision making. You analyzed and you predicted markets will go up and it starts going down. It's okay. All of us make wrong calls. You predicted, oh, it will go down, it starts going up. We all make wrong calls. But what makes you a good trader is when you make a wrong decision of market direction, you lose less. When you make the right decision on market direction, either buy or selling, you do what? You gain much more. Thank you so much for being part of the learning today. And if you have not subscribed to this YouTube channel, please do us a favor. You're going to help us in the YouTube algorithm by clicking on the like button. All right, give it a thumbs up and then subscribe and then make your comments, okay, in the video, in the comment section. And if you want to join my discussion group, I have a Telegram channel. You can find the link in the description box. Click there. You're going to see the link there, Trade with Nani. Make sure you subscribe to this YouTube channel and click on the notification box. All right, you're going to help us to grow. You can see this is actually a young channel, and I'm dedicated in helping you become a better Forex trader. And by God's grace, I'm going to be very, very regular, releasing 2-3 videos every single week that's going to help you. And I'm also going to be trading or sometimes be on live, okay, on a live trading, especially when it comes to news. All right, this is not a time I want to take you on a journey. All right, so make sure you click on the subscribe button so you can follow me up as we grow all together in making money. Don't forget, in Trading with Nani, I help you make money in the financial market, be it Forex, be it crypto, be it stocks. Right now, the video is about Forex. Okay, so let's summarize quickly. All right, so how do you close your order? How do you close your transaction? Tap here on close. You can see this close button here. Tap here. You can see how fast it is to, to buy and sell in Forex. Buy and so fast. All right. Now this is USD JPY. Okay. I want to sell very fast. I go over to new order. Okay. My lot size. Okay. 0.01. Some people will be like, oh, why are you using 0.01? Let me just give you the general view on how I enter transaction. If you have 100 US dollar, the maximum transaction you should enter is 0.01 lot size. Okay, so now I have, let's say I have $200 account here. It means I can use 0.02 at once, or I can use 0.01 into 2. So this is USD JPY. I can enter 0.01 immediately. All right, don't forget, I entered a sell order. Now I can determine my stop loss. Okay, my take profit, I want it to go down here. I'm expecting to go down here. Then when it comes to buy, I'm expecting to maybe, if it's going up, and that means I'm going to be losing, I shouldn't lose beyond here. All right. And then in profits, okay, maybe I shouldn't, by the time market gets here, the market should close. So what am I doing here? You can see from here to here is larger from here to here, meaning that I'm expecting myself to gain more if market goes in my direction and to lose less if it goes against me. So I just quickly come over here, order my stop loss, I enter 155.903, and then order my take profit 155.629. Please make sure you determine these levels even before you enter the transaction. Don't forget, I'm just teaching, okay? We're not really into the real analysis, okay, of either to buy or to sell. All right, so take note of that. Determine your stop loss and your take profit levels right before you execute that transaction. And you can enter multiple transactions. I just entered on USD JPY. I can maybe see an opportunity on Euro USD, okay, and I want to buy. I come over here, 0.01 lot size, I place my buy order. All right, in placing my buy order. All right, I'm expecting the market to reach here in take profit. Now, you can also actually drag the trade, either in take profit or stop loss. What do I mean? Let me take my cursor. Let me teach you that. Take my cursor to the green line. Because I am buying, if I drag the line up, that means it's the take profit because I'm buying. Then if I drag the line down, that's my stop loss. I'm saying if market crosses here, it should close in loss. So as you can see these trades now, okay, let me go on USD/JPY. I drag here up. Now you can see in these two trades we have right now, we have our stop loss and we have our take profit. Now it means we can close our laptop right now and go off, and the market will never go beyond those two regions. That's the beauty of stop loss and take profit. Your heart won't be jumping up and down. Oh, am I losing more of my money? This and that. The people that their heart is jumping up and down every time they are checking their charts, they're looking, is because they didn't put stop loss and take profit. So as you can see in this particular market right now, on USD/JPY, we are on minus 0.02. But on Euro USD, we are on plus 0.06. So overall, we are 0.04. Okay. Now I'm going to teach you guys, maybe at some point, maybe one of the days, my concept of taking profits and stop my taking profit. Sometimes my total profit could just be my total profit I have here, maybe not exactly on the current trade. I can decide, oh, once my balance hits $10, I close all the transactions, both ones in profit and both the ones in loss. Now take note of this, that you use stop loss and take profit doesn't mean you can close your markets manually. So I can come here. I can come here right now and close this 0.05 profit manually. Close this one manually. All right. Thank you so much for being part of the training. This is where I'm drawing up the curtain. If you have not subscribed to the YouTube channel, make sure you subscribe. God bless you really good, and watch out for the next video. And don't forget, join the Telegram channel. All links you can find in the description box. And if you don't have any account with a broker, use my link in the description box and open an account with Light Finance and chat me up on Telegram channel so that I can help you and follow you through on your trading journey. God bless you really good for being part of the learning today. Thank you. See you next time.